What's up, you guys? Welcome to Financial Firefly. My name is Fernando, and welcome to a journey of personal finance. There's so much happening in the world. It's truly transformative times. There's such a great redistribution of wealth going on with tech and, illness 19 and all this other stuff going on. So, in light of all that, we're going to go over how I've grown my dividend portfolio and grown my Robinhood portfolio. And really, it all comes down to being fortunate enough to having a good paying job. We're going to go over my investment strategies, what changes I want to make, what changes I have made, and really, things to come. And what I'm looking for in changes in strategy, because there's a lot that's going on. I made a lot of mistakes. We're learning here, and this is really documenting my journey and helping you guys invest and get invested and get excited. It is so exciting. All these companies are doing so many different things, and essentially you can monetize companies and news and media through YouTube and telling people and communicating and expressing emotions about different things to people and information, right? And transferring information and communicating information about companies and technology through social media. It's incredible times. So if you can do all this stuff and get in on it, get excited about it, that's what I'm all about, because I want to make this my full-time gig. Without further ado, we're going to get into my M1 Finance dividend portfolio, fireworks, and my Robinhood trading portfolio. Let's get into it. So let's just jump into some headlines here. The Dow Jones Industrial Average rose 500 points. NASDAQ, S&P, and Dow all rose about 2%. Retail sales surged 17.7% in May, according to the U.S. government. Apple and Caterpillar are some winners of the day. Moving on, we have some really interesting news with Hertz, who was planning to sell $500 million in shares. They now plan to halt that sale, and this is due to retail investors and speculators, gamblers, day traders, really driving some massive volatility and irrational investing into this stock. So the SEC is now reviewing it. This happens all amid coronavirus projections in the US to now surpass 200,000 by October in, essentially only a couple months from now. Which is pretty, I would say it's actually expected. I think the death toll is going to be far worse than we think overall, the long term. But I think the economic impact, just because of the Fed and technology and the momentum we have, hopefully willing that everything still just goes on, I think the momentum is going to carry, and it's really kind of shaping up to be a V-shaped recovery. So I don't think it's going to affect anything too much. The chairman of the SEC, regulators never thought investors would be gullible enough to buy Hertz. Garbage, Harvey Pitt says. Former SEC Chief Harry Pitt on regulatory concerns surrounding Hertz stock sale. He basically says it's garbage, and he never thought in his career people would be dumb enough to do this sort of thing. But this is betting, this is gambling, this is where we're at right now. People have so much time due to illness 19. We're all just kind of in this together. Moving on, so to some Tesla news now. Tesla Model S, now EPA officially over 400 miles according to the EPA. And it cuts prices by $5,000. This kind of sent that stock down for the day. This is up as of Wednesday. But that's to be expected. $5,000 price cut. The profitability is going to go down. They're not really changing too much to the car, I don't think. They increased some efficiencies here and there. 20% increase over the range of the Model SD. It basically says they made it lighter, and the EPA testers left the door open, which reduced their mileage to under 400 during the last test, so they claim. Bigger news, I think. Tesla signs a 3-year pricing deal with battery cell maker Panasonic. This is huge. So this is some news we've been waiting for to see what the relationship between Tesla and Panasonic was going to be. Tesla and Panasonic. So if you don't know, Panasonic was Tesla's exclusive battery manufacturer at the Gigafactory in Nevada. Their general conditions have been expiring. This basically says that the general conditions have been renewed for 10 years. It doesn't set the terms for exclusivity, so that means Panasonic can now go out and populate batteries along the US to boost the capacity of the industry as a whole. So synergistically helping that vision of Tesla to electrify and batteryfy the future. They really acknowledge there's going to be a huge demand for batteries across the country, and they're letting Panasonic go free range and partner with other people to really electrify the future and take some of that burden off of Tesla, which is a double-edged sword, being, the largest battery manufacturer in the world. They make all they can take. They really don't have enough capacity to supply it to other people, and so to support their vision, they're letting Panasonic go non-exclusive, which I think is mutually beneficial. Just to finish off here, last month, Tesla reported its third consecutive quarterly profit, despite the economic impacts of the coronavirus pandemic, taking investors by surprise. So, Tesla is really on fire. The pandemic didn't stop them. They're running it over. They're freaking shocking the shit out of illness 19. And I think they're going to come out of this. And innovation really thrives in times of turmoil and change. It's when you innovate, you can adapt and you can survive and profit. So it's pretty amazing what Tesla's doing, and they continue to increase their efficiency. So I'm really excited to see what they do. Now in the future, we'll talk about Nikola a little bit more. But Nikola, another headline, Nikola will see the bubble in the market, a $4 billion company with $0 in revenue. We're going after the top-selling Ford F-150 with our $60,000 electric Badger pickup. So, they have a pickup, which is funny because I don't know if you can see on the side here, a Volvo ad. But essentially, Trevor Milton went public in June with Nikola. The stock price surged about 100%, leveled down about 30% lower, and now they're selling a Badger, a mid-range Badger, competing against the Ford F-150 for $60,000 to $90,000. We shall see how this does, but we'll do more videos on that later. All right, so welcome to my passive income portfolio with M1 Finance. This is a dividend growth portfolio where I reinvest the dividends I earn every month, every quarter, every year back into the portfolio. This is a new portfolio. It's only been around 6 months or so. And as you can see, I've funded it $6,500, just over. I've market gained 79, and I've earned 60. I really don't pay attention to the market gain. That fluctuates a lot. Earned dividends is really the number I'm paying attention to. And I'm going to map that month over month to see where my growth rate's at and if my strategy is working. And really, I actually am going to change up my strategy. I don't like that I have some safe stuff right now. I really want to be risky. I'm really young. I think I can afford to. And I'm going to change all my holdings really more focused in tech, dividend, and growth stocks. Just because I think it's more of my profile, and I really want to go all in on stocks like Tesla and Amazon, Apple, Microsoft, maybe Nikola if they're not a scam, renewable energy, everything ARK Invest, biotech, and really involved that way. So I started this portfolio in December of 2019. I funded it $1,000 along the way, and then sometime in February the stock market started to tank. It bottomed out in March, but as you can see here, with steady investing, I have $25 a week invested on top of whatever I can throw into this, and most recently $500, then another $1,000. And the goal here is to have this at $10,000 by the end of 2020, and to really be all in tech, growth, investment, dividend stocks with, really, really heavy future growth potential, not too much market saturation yet, and really heavy room for growth, wide moats and all of that. So you could see, took a 20% dip, but overall, I'm still up in the worst and the fastest bull market of all time, 3.5%, 3.85%. And if you compare any savings account to $60, even accounting for taxes, that's a pretty insane amount of return. In the last 6 months, I've deposited, roughly $6,500, and out of that, I've gained $60. So I've gained a 1% return in 6 months, and that's only going to compound on itself. So hopefully we'll do 1 point something in the next 6 months, and then after that maybe 2, and then start to really compound on itself after that. And I am heavily funding this portfolio, and I will continue to do so because that is my strategy. And this is a passive income portfolio. The goal is to get this to $1 million. We'll see how quickly that happens, but I'm going to be selling a lot of my stock here, AT&T, perhaps Invesco, a BV, Disney, but some of these are actually do fit my bill and fit my investment profile. But I want to maybe put them in different pies or reallocate them a little different. As for my Robinhood portfolio, my actively traded portfolio, so this portfolio is about 2 years old, trading pretty well. It was doing better. You can see these big swings here. These are really good trades and pretty bad trades all along, and you can see these wild swings, massive volatility in this portfolio. And I took out some good puts when everything was going down on the airlines, and the puts were successful, but then I really held on too late. I swung too late, and everything came crashing down here. But now you can see on the tail end, I am going back up, which is fine. Learn along the way. All these puts here, these were some of the big ones that I lost on. These are some of the more recent ones that I'm still down on. I'm really not good at this apparently, but that's the fun of it. I'm kind of competing against myself with my M1 Finance and my Robinhood, and it's really time in the market, not timing the market. So we'll see how well I can time it. Apparently I can time it pretty well, but I can't get out. I'm a little bit greedy, and that's all of these upswings, these massive upswings here in my portfolio are, really substantial percentages, 20% or more. And I've missed a little bit late on all of them. So I'm really not doing that anymore. I'm following some different strategies, taking gains early and seeing it grow that way on the tail end. And this is beating the gains of the S&P, the Dow, the NASDAQ. But that is because I do have a really volatile portfolio, and it tends to lead the market in loss and gain, pretty leveraged. And that's just, that's just the nature of options when you're trading. You buy the permission and the privilege to trade in batches of 100 shares. So you're really leveraging your money when you buy into options rather than stocks like here. And as you can see, my portfolio really is cannabis stocks and tech stocks. I'm really going to focus on more tech, like I said, tech dividend. I really like high volatile stocks in trading, but just for a little context of why I'm switching over to my strategy is we're really in such great times for growth stocks and tech stocks in particular that it would really be a shame to let all this time, your most valuable resource, pass by when really not maximizing its potential, its growth and yield potential. And so as you can see here, we have a starting principal of, as you can see here, we have starting principal of $1,000. We input 1% year increase, annual dividend increase. We're being very generous, 15% tax rate. We have 10% appreciation. And we come in at 288% over 10 years. 10 years, doubling your money, okay. You go here and we input a 20%, double that percentage growth. Pretty actually conservative for tech stocks, and still you're getting 500% total return with just a 20% year-over-year growth rate and no dividends. No dividends. So you're still doubling your percentage growth rate, which is in the hundreds, by the way, which is, doubling by essentially twice over. And then 10 years for 50% annual share price appreciation over 10 years is 5,666% return. That's really not feasible, but ideally that's what Tesla's going to do if they can grow 50% year over year for maybe 5 years, let's say, and then the rest 20%. That would be pretty amazing. We'll see how fast they can scale, but I really want them to be my top holding, and I'm going to adjust according. So that's my strategy going forward. And so 11,556 Robinhood trading portfolio and 6,601 finance passive income portfolio. I apologize. I really just want to get this video out. My voice is a little scratchy, and I really do need to rest it up, but I really just wanted to get a video out, and I'll really be going more into detail. This is kind of just a booster for myself to really put out more content. I thank you so much for watching. So there you have it, my two portfolios, my M1 Finance passive income dividend portfolio and my Robinhood trading portfolio. I apologize, this was a little rushed. My voice is a little scratchy and kind of just get this out. This is a little bit of a motivator for myself to put out more content, and I am so thankful for your support and watching. I really am going to put out more stuff. Hold me to it, ask questions, challenge me on things, comment what I'm doing wrong, what I'm doing right, what you think, what your investment strategy is. Hit the like button, hit subscribe, the notification bell. I really appreciate you watching. I want this to become my full-time gig. This is like, I hope to make like 100 or 1,000 of these before this becomes my full-time gig. But if I say it to the camera, it's gonna happen. And it's gonna happen because I'm doing it right now with your help. And I hope I help you. Thank you so much. Have a great evening. Catch you later, Fireflies.